Hey everybody, this is John. Welcome to the free video. And what do we got cooking tonight? Well, we've still got a lot of interesting 195-minute squeezes that are setting up and some key stocks. And I like to also have got some mid-level buys. This typically will start the next thrust higher. I'm intrigued with Netflix here because the all-time high is creeping up. It's $133 and change. And at this point, we're getting close enough that it just kind of comes up a magnet effect. And so one of the things we did here today at the close is just picked up some calls that expire next week with the idea that this squeeze and the proximity of that all-time high will just kind of rip us higher. Another example of this is a trade that we did in Tesla. Now, Tesla didn't have a 195-minute squeeze, but what was interesting with Tesla was today's price action. So first of all, it gapped down on bad news, quote unquote bad news about car sales. It didn't quite come in as expected. But you'll notice what happened is it quickly reversed on huge volume. Okay, when you see something like this, and there's a 15-minute squeeze here, but when you see something like this, the action gets hot and heavy, and it closed today in perfect consolidation near its highs, and so now we've got a target here at $232.86 at the fire line. So with Tesla today in the room, we picked up some options. We had a great setup. So early in the session, we picked up some long calls. Later today at the close, we picked up some out-of-the-money ones for some people that were asking, is this something that was still tradable? And all of these, we've got targets already in place on a good till cancel basis for any quick move into that fire line over the next 2 days. And we're also continuing to look at the kind of post-tax loss selling grind higher in VRX. Although we want to look at exiting these positions this week. Already we're up about $1 from our tax loss selling class in the stock, as well as that's obviously benefiting the calls that we bought and the puts that we sold. And we'll see if we can give that another day. And then the other one, we also, of course, got out of Fitbit. We're still keeping those puts. Those look fairly good. And then last but not least, we were able to take out our profits today on Gilead, which was good for a double over the course of 2.5 trading days, which was great. So the next question becomes, what next? And the big question right now, of course, is on stocks. The one thing I'll say about the stock market, and I've talked about this before, is that the idea right now, the way this market is acting right now, it's tricky just to dive in long if you're flat because it's extended, but at the same time, the quality that it has to it is that there are no sellers. So there's a lot of people that don't want to buy because it's extended, but there's nobody selling, i.e. there's shorts covering, et cetera, et cetera. And that kind of market can just continue to drift higher. If you look at the Qs here on a daily chart, you'll see here that that had kind of the deepest correction on technology, but technology's been coming back. And if we look at the weekly chart, the momentum just changed, starting to change this week back to positive, meaning that this could issue a fresh weekly buy signal. So the main point of all of this, even though there are some stocks like Amazon that frankly aren't acting great, there's enough things out there that are screaming, do not fight this, okay? And you're going to see sectors now like basic materials starting to come online, and they're having these big moves. So what's happening is that as a sector like technology is taking a break, basic materials and consumer discretionary stocks are filling the gap, and we're seeing this across the board. So just be very, very careful on the short side. I like those long kind of unique situations that we discussed, and hope it helps. Okay, and just a reminder, okay, we've got a lot of very fascinating things, frankly, happening in 2017, okay? The least of which is monetary policy being taken away from the central banks and putting back in the hands of government. What does that mean? Well, markets around the world, asset classes around the world are having either huge moves to the upside or they're getting destroyed because of this fact. And what I want to do is on Tuesday, January 10th, I'm going to hold this free webinar to discuss this in depth. Now, not only are we going to be talking about bigger picture, like what to look at and what to expect and how to position for it, but also dialing that down into shorter term strategies. Okay, I mean, hey, as traders, we want to make money, and it's not necessarily about, hey, this is the trend for the next 3 years that you want to sit on. If you want to do that and buy some leaps on it, great. But at the same time, on a week by week basis, how can we benefit from this? How can we use these correlations to give us an edge in the market? Okay, and that's the kind of stuff we're going to be talking about. So simplertrading.com/shift. Looking forward to seeing you there. It's going to be a lot of fun.